Welcome to the Right Tack, where we help private practice owners face the headwinds of the healthcare industry. I'm Paul Jonas, CEO and co-founder of Breezy Billing and Phoenix Credentialing.
I'm Jim Jonas, therapist, co-founder of Breezy Billing, Phoenix Credentialing, and the Jonas Center.
We're excited for today's conversation, especially for anyone running or planning to grow their own behavioral health practice. Whether it's opening a new office, hiring staff, or investing in technology, you'll eventually need a strong relationship with a bank that understands your business.
Yeah. And that's why we've invited Tim Sery to come onto this podcast. We've known Tim for quite a few years. He's the vice president of commercial lending at BankVista, which is a bank, within the Twin Cities metro area and west of it.
Correct. Yep.
Tim started as a teller about 25 years ago. Now,
Yes.
I know he doesn't look that old.
I am. Don't worry.
Okay. But started there, worked yourself up to being a vice president and specializing in working with companies like the Jonas Center and Breezy Notes and Breezy Billing to get us on the right tack. So
Try to at least.
try to. Okay. All right. So we're going to be talking to Tim today. So let's dive in.
All right, so Tim, today we are talking about something a lot of practice owners don't really think about until they need it, their relationship with their bank. And that's a big deal, especially when it comes time to grow.
Mm-hmm. Very much so.
Yeah. And we know banking can feel like a mystery to most entrepreneurs who are just starting out. But from everything you've told us, having a great relationship with the right kind of lender can really make a difference.
Yep. It can make could make a huge difference for sure.
It can, and I'm just going to play off of that too a little bit because I want to already plug your responsiveness, Tim. And I think that it comes, I think, with your personality, but also with that community bank sense. And do I appreciate that? I just want you to know.
Thank you.
So you've been in banking for 25 years or nearly 25 years. Could you tell us a little bit about how you got started, what keeps you passionate about working with small business owners?
Yeah. So I started in college. One of my roommates was a teller at Market Bank. And he started at the beginning of the year, and they were looking for more people. So he just asked me if I was interested in applying and becoming a teller. And I said sure, because the bank from our apartment was maybe a mile away, so it was close to campus as well. So we put in the application, got hired, and started working. That was during my junior year in college, and went through my junior year. Came home for the summer, did an internship back up here, and went back down for my senior year, and stayed on as a teller, kept going through. Towards the end of my senior year, our analyst got homesick. He was from the Chicago area and decided that he was going to move to a bank back home. That opened up that position. So after I graduated in May, and then interviewed for the analyst job, and that was I got that in August of that year. That was August of 2001. So got through the next couple months, and I believe it was in October, November. Wells made the announcement, or the announcement was made that Wells was buying Marquette Bank. So Wells took over in January, and I just decided, big banks are not my thing. And that's kind of what started that. And I moved back up here. I went to school down in Iowa. I came back home, got a job as an analyst up here, and did that for, I think, maybe 5 or 6 years, and knew that I wanted to get in on the lending side of things. So I interviewed and got hired as a lender, and have been doing it ever since. So it's been almost 20 years on the lending side, kind of through the ups and downs. I've been was at another bank that was acquired by a bigger bank, and it keeps going through 2 acquisitions by bigger banks. It reinforced my personal desire to just be at a community bank. That's where I think it really matters. You get that relationship. You can have that 7 p.m. on a Friday night phone call. Something happened. I need help with this. Weekend. It just reinforced my desire to be at a community bank and to help. Not necessarily small businesses, but anybody that needs help. Try to get them the help that they're looking for, and try to get them keep moving forward.
So you went to school in Iowa?
Yep, little school, Mount Mercy College in Cedar Rapids, Iowa.
In Cedar Rapids, okay. My wife and I went to Iowa City. This was
Okay.
a few years early. I just had to check on that, okay, Tim?
There is something about Iowa.
And those Iowa people? Oh, we're not going to go there, are we?
Not today. That's the next one.
Good people.
But the other thing, that sense of, the community bank and a smaller structure and everything, Paul, I think that's where we focus and who we like to, bring on. I mean, smaller customers who, we don't want the huge customers. We're looking for the small independent practitioners, and I think there's a commonality there. So
Yeah,
yeah,
absolutely.
well. So Tim, thanks for being with us. And just want to thank, before we dig into the, all the details here about banking and everything, we're just wondering, what you're up to this weekend, and what are you up to?
What do you got going on?
It's probably going to be a little busier. I've got 3 kids, 19, 16, and 9. And my older boys, they're pretty self-sufficient. But our 9-year-old, we're still in that, going everywhere with her, taking her stuff. So she has state lacrosse tournament this weekend. So we are doing that. She plays Friday and Saturday, our pool games, and then from there she'll play on Sunday. But Sunday I have to leave early because I'll head to Madison. I'll be in Madison for the next 2 weeks for graduate school of banking. So it's a 25, 26 month course, just kind of strictly for banking. It brings in people all across the world. We've got a couple people from Africa, I think somebody from South America. Vast majority are from the Midwest. Banks across the Midwest. Go to Madison. We're there. I'm in year 2 of year 3, so we'll be there for 2 weeks. You're in class. You're in the dorms. It's a back to your 18 to 22-year-old self days.
Hot tub time machine.
Yep. Yeah, exactly. So
I hope there's air conditioning.
Do that, and there is air, so it is nice. At least there was last year.
Things have improved.
So we'll do that. I'll do that for the next 2 weeks, and then you got tests in there or quizzes, and then when we get dismissed. There are 4 papers that have to be written roughly every 45 days. So it's not a cupcake. So it's a little bit of a grind. So looking forward to getting there and getting year 2 under my belt.
Yeah. Oh, for sure.
Cool. Wow. That's.
We're not doing anything that exciting.
What? Yeah, Dad. What are you doing then? If you got none of that going on.
We are having a wedding shower on Friday night. It's a couple's shower, and it's dress up. So we have to come as farm animals just because that's what we do out in the western part of the suburbs. So that should be a lot of fun. And then I got a new pressure washer. I got to put it together, and I'm going to pressure wash my deck. So that's it.
That is one of the most satisfying things you can do is pressure wash a deck. Instant results.
Yeah. What about you, son?
Well, I'll be a little bit busier too. We are, my oldest and I are going to Philmont Scout Ranch, and we're going to do a 42-mile hike over the following 9 days. So we're hiking up a mountain, we're camping. We just had our shakedown last night where you look at all the gear and make sure you have everything. And I just had to put another Amazon order in to get all the stuff I had missed, even though it's listed right there in the book. But really excited to be spending that time with my son and to challenge ourselves with this big hike. We'll be at 11,000 feet, so we'll be camping a little bit below that. But the peak of this mountain we're climbing goes up to 11,000 some odd feet, I think. So it's a once in a lifetime deal, and I'm really excited to be sharing that with my boy. Well, all right. Well, we can get to the meat and potatoes of things. So, we'll start just by asking you a little bit about community banking and small business lending. All right. So Tim, you said you prefer working at a community bank. What makes a community bank different from a large national bank, especially from a business owner's perspective?
I think one of the big items is with community banks. You're getting local decisions being made as opposed to a decision coming from national bank's headquarters. Businesses may be the same in one area to the next, but each market has differences that need to be looked at rather than just applying a blanket. An example, specific to private practice owners, would be billings. Some areas are more expensive than others. It's not one box fits all. So if your practice is in the metro area here, but the bank's headquarters are in a small town and somewhere in the southern part of the country or wherever, underwriters with the bank may feel that you're overcharging and back down projections when you're looking to expand or do something like that. So they just might determine they may have a perception that prices are should be this. So it's just that can be a little different. So the services could be the same, but one bank might look at it different because they're using their community. It might be less than what you're looking to do or charging in their area as opposed to the area that you're actually in. So that could have a huge effect on future growth and expansion for the practice. Another potential difference is availability. With larger banks, you may have an 800 number that you have to call to talk to somebody. Where the person, you have no idea where they're at. They could be in your town, they could be in the metro area, they could be the other side of the country. You're just not really sure. So with a community bank, you can walk in to the bank, who you're talking to. With a larger bank, you walk in to the branch, one day, and the next there might be, somebody completely different, just with higher turnover and things like that. So, they don't have the recognition. You walk in and say, Paul, hey Jim, how's it going? What's new today type of thing. So, with a smaller community bank, we have the local numbers that you call when you want to talk to somebody. You're talking to somebody at that location. So, personally, I list my cell phone on my cards. I suggest customers to reach out to me on that. So if you're having an issue at night, on the weekend, call or text me and I can get a jump on it sooner, waiting until the morning or, things like that. So usually, personal opinion, it's usually the littler things that community banks do better than the bigger banks.
Well, and so what are some things folks will call you about on the weekend sometimes? I'm just curious about that because I've never had to call you on the weekend yet, but I can put you on my speed dial.
The biggest thing is, an issue with their debit card. Either they got a notification that charges are coming through that weren't theirs, or that it's not working. So either their debit card, something happened to where it's not working, or they've been hacked. And somebody's trying to push through where you need to get your debit card shut down and get on it. So those are that's the biggest. That's the thing that that most have called on. People have called as far as, hey, I'm looking at this building, can you run some quick numbers and let me know what that looks like? Or, hey, I'm looking at buying this piece of equipment, can you tell me what a payment would be if I bought it at this price and put this down? So just so they can kind of keep going on with their day and with what they're doing.
Right.
That's, like I said, that's just kind of my goal, is just let everybody just keep moving forward.
Awesome. Well, I know we've appreciated being able to reach out to you and pretty quickly getting a call back on various different things, even if it's just like helping our business operations. Like, boy, I wish we had an answer to this today, and usually we get the answer back that day. We're not. One thing that drives me nuts is having to call an 800 number and going through a phone tree to get and there's sometimes you got to get through one thing. But when you're dealing with operators or someone from, someone who doesn't understand, the bank, but they're just a call center or something, it drives me up the wall. And, and we were at a local community bank. We were initially, and that got bought by a much larger bank, and everything switched and got depersonalized. And it just, I don't know, that level of service. You just don't get that once you get beyond the community bank, I think.
No.
So
And you get a lot of turn too, like what you were saying, Tim. And I really appreciate the being able to know you and have that relationship and not have to reinvent the wheel every time you call. And it's, it's very valuable.
I appreciate that. Thank you.
So for our customers, and I think my dad kind of described them. Most of the people we work with are either they're just starting their business. They went to school for for a degree in psychology. They've got their master's degree. They just got licensed. They've worked for people or been in school for most of their lives, but now they're ready to go out on their own. And so they have to learn the business aspect, which we covered in our last episode of the podcast. And then one of the next steps is getting a bank. That's a chunk of our customers. And then we have another chunk of our customers that are, they're established, but they may be looking to grow, or they, are looking to expand beyond just 3 or 4. Some folks have really have focus on expansion. Some people just do it naturally, like it just happens. People want to come work for them. So those are the two types of providers that we typically work with. So for folks like that, what should they be looking for when they're choosing a bank or a lender for these types of practices or businesses?
I think the biggest thing that that people need to look for is just when they're looking for a bank or a banker is just somebody and somewhere that they can establish or create a relationship with. Again, to me that's what it all comes down to. You got to have that solid relationship. With larger banks, again, your banker might not be in the area where you are, whereas a banker at a community bank, they're right there, they're right down the street, they're the next town over, whatever it might be. So you want a banker that can have that you can have a conversation with on your timeline, not necessarily theirs. With practice owners, you probably have a limited amount of time throughout your day. You don't have a ton of time to go to the bank and wait and things like that. So you want to maximize your efficiency during that time. So either chatting with your banker on the phone or meeting face to face at your availability rather than the bankers is big, I think. So in my mind, again, relationships with a banker and a customer are huge. The stronger the better. So if you don't, with a bigger bank, it's cliche, but a lot of them you're a transaction or a number. With a community bank, again, you walk in and they're eventually they'll know you by name, not the first couple times, but the more you're in, the more you're on the phone, they get to know you, and it solidifies that relationship, and it just helps it grow, makes everything easier.
Well, and one of your takeaways you said for I think earlier, is that if you don't have a solid relationship here with your bank, you might want to find a new one. Can you expand to tell us more about that, and then maybe expand into like what it takes to change banks too?
Yeah, so like I said, you want to make sure that you can have a conversation, or meeting with your banker when you're available, not just when they are. So most community banks will try to make it work, whereas bankers at bigger national banks will might use that kind of that get in line approach where they just deal with items as they come in. So if you're the fourth person to call that day, even though the item might be a big item for you, they just deal with them in the order, that the call comes in or the inquiry comes in. So if the first 3 people that are calling are just looking for copies of statements, and you're the fourth person, and your debit card's been hacked and you're looking at some charges coming into your account, you should take the priority, or at a community bank, they'll make that done. Large banks, it just disputes started, and they just get it going when they get to it. So there's other times, that tougher conversations need to be had with a bank. So if you're, struggling or have issues, again, be forthcoming, work with your banker on that. Banks don't like foreclosing on people or businesses. We're not psychiatrists treating people. We're not, metal fab operators, machining parts, plumbers installing, plumbing equipment, in a new building. We're bankers. Our goal is to work with business owners to grow and succeed, not to take over the project. So, if you're struggling, let's chat. Let's figure out a plan to get you back on track. This does take time and numerous conversations. They're not all easy, but having that relationship, definitely helps. So typically, larger banks will work to move you out of the bank, when struggling, and disregard any sort of prior relationship that you might have had that might have existed, where a strong relationship with a community bank, comes into play. Both when times are good and when times are bad. So, again, that's the biggest thing comes down to relationships. If somebody's looking to change, the big things are just you're going to be asked for a lot of information up front. So just know that it's a bigger hurdle up front. A lot of the information, it's not always that way. Once you're in and everything, kind of the water settles, it's a much easier go. So there is work involved right away to get that switch made. But once it's done, it's most people look back on it and go, okay, that was definitely the right decision that we made there.
Or really worth it. I mean, we went through that with you guys and moving to BankVista and yeah, well, I don't want to say hand holding, but it's like you really helped us through the process, and the community bank aspect really helped move that smoothly, or as smoothly as it could be, because it is a pain to change banks. That's true. Yeah.
And we acknowledge it. It's not ideal. Again, it can be a little bit painful. It takes time, but it's at the end of the day, most people look back and go, that was the right decision, definitely.
Absolutely, yeah.
I know that's how we felt. Well, and I got to get back to the relationship thing too, because Dad, at the previous community bank that we were at, before it switched to regional bank and all that, didn't they have a special name for you when you'd go in?
Special name?
Wasn't it?
What?
Didn't they call you like 007 or something like that?
Oh my gosh, you're right. What was Bond?
Mr.
James
Bond.
Yeah.
So
Mr. Bond is it.
How did that? I got to get this in here because I just love this story, because you'd walk into the branch doing stuff. Usually it was for the Jonah Center, because this was back a ways back. But you'd walk in and pick up the story.
And that's what they say. Oh, here's Mr. Bond, in from a mission. I remember this now. Awesome. Yeah, I'm incognito from a mission. I just got back, so I need some cash.
I couldn't imagine that at a larger bank branch, but that's just one of the stories that stuck with me. That and I don't know, and I think I've mentioned this to you before, Tim, because I used to work at the Independent Community Bankers of Minnesota way back in the day. That was actually my first real job before my wife and I were married, but when we moved back to Minnesota. And so I got a big soft warm spot. I love community banks. We've been, I don't know, it's just a great mission, great reason, and I just love that the personal attention you've talked about. So yeah, and you just hear a bunch of stories like this, or anybody else, like every banker I've ever met was always like, they're just trying to help people out and improve the community that they're in too, which is exactly what behavioral health providers, I think, need to do. That's the fight we're fighting now, is helping independent behavioral health providers stay independent and not get bought up and not have this great big giant, conglomeration, corporate behavioral health type stuff. So it lines right up with our mission, with a lot of our providers and the folks that we work with and the folks we want to reach out to. So let's say we're talking about behavioral health providers who want to expand. They've got 3 to 5 probably employees now, and they're making a little bit of money. They're working a little bit. They're working hard. They're becoming more administration, but they want to open a new office. They want to hire staff. They want to kind of go to the next level. If they need a business loan for that, how does that start? How do they initiate that? What's that look like? Can you walk us through that process?
Yeah. So typically, it's, if you don't have a relationship, more than likely you're talking to somebody. Hey, I don't have a relationship with this bank. Who do you work with? Okay, go talk to Tim or somebody like that. You hopefully that warm handoff comes in. There's some expectations, to get it there. So expect to provide some historical information, showing how the practice is done to that point, but also, provide some projections on how the practice will do once that expansion, or once you pick off that new office is done. So, bankers, we're going to typically ask a bunch of questions up front to figure out, the project that what's proposed. So, if you're looking to open a new facility, we'll chat on, what is needed to get the proposed facility, from the initial conception where you were just talking about it to doors open. Are you looking to buy a building? Are you looking to rent a building? What sort of equipment or furniture might be needed for the property? How long will it take for it to be constructed? Or if you're leasing space, how long will the build outs take? How many people are you looking to hire to staff the facility? Do you have the patience to fill the schedule from day one, of opening, or will there be a ramp up period? So,
And
typically, I'll try to ask as many questions as possible to get as much information up front as possible. So all that does is just makes the request as easy. It just makes it easier and as easy as possible. So again, expect a lot of questions to be sent, right away. But once that's done, it should slow down. Expect some, a few questions as you go through it, here and there, once you get your approval. And then once their request is approved, it's time to get everything moving. So, you get your doc signed, you start making your improvements, you get the equipment and purchase or the supplies purchased, all that type of stuff. So it's it's not meant to be, a really slow down, long process, but up front, again, it's just like with changing, you need to, get those questions kind of out of the way right away. So,
and you talked about expand, like, do you have different products? So, for our customers who have a handful of providers on staff, and usually they start by renting. Almost everybody starts by renting, and we're going to be talking about both co-working and virtual offices in our next episode, and the one after that we're going to actually talk about renting and buying space. But what happens is a lot of folks, start where they don't have that office filled, and they're not making revenue using that space, and from there they have to build up to it. So, are there different products or anything, or from your perspective? If I'm using it at 50% capacity, how can that be worked into the loan or anything like that?
Yep. Yeah. So usually what we've done with, especially with medical providers and facilities, we'll look at the SBA. So the SBA, an SBA loan, it's just where the bank seeks assistance in the form of a guarantee. Okay. Or providing a loan from the Small Business Administration to help customers, do projects that they may not be able to do with regular financing. Buying a vehicle, it's not an ideal SBA loan. You do the loan, you make the payments for a couple of years, the loan goes away. It's pretty standard. But with SBA loans, there's usually more to them than just buying a vehicle. So, there's a few reasons why the SBA is a solid program. Customers might not have a big pile of cash that they can or want to put forth for a down payment. They don't have enough collateral to cover what they want to do, or they're just, like you said, they're just starting up and don't have that historical financial information from that specific facility. They might have other branches or things like that, but not in this new area that they're looking into. So as an example, you're a practice owner, you're looking to open a new facility in a new town in rented space. You might have some cash saved up from the existing practice, but not enough to cover all the, the build outs. You got to buy the office furniture, hire new staff, that type of thing. So in this scenario, I would suggest an SBA loan to get you to the finish line. So although there is value in, what you do for the improvements, there's a true cost. For the bank, there's minimal value for collateral. You don't own the building, we can't go back and take it. So, that's part of it. Also, when you're hiring and training in new employees, that carries a cost that there is no, collateral value to the bank. Employees are, obviously you have to have them. We can't, liquidate an employee. It's just not possible. So, office furniture, and equipment, stuff like that has a short lifespan. So you're going to be replacing it every couple of years. So, having the SBA help out, provide that guarantee, bridges the gaps, for the bank. And at the end of the day, it requires some additional information, on your part, as the practice owner, but, allows you as the owner to open that new facility and allows the bank the coverage that they need to provide that financing.
Okay. And so if I'm a therapist, I've got my LLC taken care of. I don't know, what all I have to have in order to show you that. Maybe I've talked to my accountant, and hopefully I'm using an accountant and not just QuickBooks by this point. But like, what are some of the things you would need an owner operator to have in order so that you could have a meaningful lending conversation?
Yep. The vast majority, it's all going to be financial, related. We're going to ask you to provide some specific, again, financials, to and for the SBA. You're looking at the last 3 years of your full business tax returns, financial statements, along with a year-to-date balance sheet, profit loss, current debt schedule. Some people will, hey, here's the first page or the first couple of pages of the tax return. We have to have the full tax return. We look at 2 or 3% of it, and a vast majority of it is just going to be for the file. But we have to, especially when you're dealing with the SBA or examiners, you have to have the entire tax return, in the file, just in case. They might be looking at something different, so than we do. That's why we ask for the full tax.
And that's
return.
usually
as far as
I was going to say, for like a lot of folks have QuickBooks or do like the Intuit Online or just wherever they get their taxes done, they should be able to get their returns. Or if they've got their accountant, they can ask their accountant for those last 3 years. And then the P&L, the profit and loss. Can you talk a little bit about those statements? We covered it a little bit in our last segment, but as far as from what you're looking at on the banking side, the balance sheet, the profit and loss, what are you looking for there, or where can providers find those? So just to break it down a little bit further for everybody.
Yeah, so balance sheet, basically it's just looking at what you have, what the business has, for assets, as well as, what they owe. We're in a perfect world, you've got a balance sheet that you're showing positive equity, your assets exceed your liabilities. That's not always the case. Assets depreciate sometimes, faster than a loan might be paid off. So, like in the instance with a vehicle, it probably depreciates faster, especially right away, than you're paying down the loan. So that's kind of what we're looking at on the balance sheet side. As far as the P&L goes, a lot of it is, okay, where are you year to date? Are your sales flat? Have they risen? Are they down a little bit? Where are you at profitability wise? The same. Are you same as last year? You're doing a little better this year. Costs went up this year. You needed to pay employees more. Basically what we're looking at is we want to see, ideally you're profitable. It's not always the case. There are cyclical businesses that we'll work with, but we want to see that you are, you're looks like, again, you're moving in the right track, and you're doing it, that way. If there's, big differences, that'll just help us. We can look at it and be like, hey, okay, your sales are up 20%. What did you do this year that is making it, so much better than in years past? Or, if there's, expenses are up, hey, okay, I see your salaries and wages are up. I assume you're having to pay employees more, you're hiring employees. Is that the case? Yes or no? If not, what's the reason?
Okay.
So it just basically, we like to see everything progressing, and then if there's big changes, it just allows us the time to ask questions and kind of poke at it.
Okay, and I know you keep mentioning assets, and I also think about what kind of how we started. We started with an SBA loan, which was great. I know a lot of providers don't have a lot of assets. They might have the couch and the chair, and otherwise they've been renting space, and they've got a computer that's 3 years old or something. So in cases where there aren't a lot of assets, can a provider still talk to you, or what do you do in that case?
Yeah, for sure. And that's where the SBA is a big help. You don't have to have, a ton of assets. You probably have, if you're an existing practice, you probably have, patient files. To you or to providers, those are valuable. I mean, every patient helps. To a bank, it's not, they're not huge, but we know that there is at the end of the day, there is a value there. So, having, if you don't have a ton of, collateral or, large amount of assets, it's okay. We can, talk it out. Again, that's where the SBA comes into play, because that they are there to bridge that gap. Okay, so everything else works, but you just don't have the collateral. That's where we rely on the SBA. They basically, to come in and say, "Yep, okay, you're good. We'll give you a guarantee," and away you go. So for sure, don't let anything. If you're even if you're losing money, this year, but you've done well in the past, or you don't have a ton of assets, or everything you do have assets, but they're depreciated. Don't make that as an excuse to not take that next step. Have the conversation, pick up the phone, schedule a meeting, and just see. There are some banks that probably will say no, or that's this isn't our jam right now. But for the most part, you work with your community bank and your banker, they're gonna figure out a way to work with you to try to get it.
Okay, and so when you
Tim,
get all this Dad, go ahead.
Okay. I'm just wondering too, the collateral that you two are talking about. It's like, okay, so if I don't have much collateral, how can you maybe your opinion about how wise or unwise it is to possibly put up your own personal whatever property as collateral? What are your thoughts on that?
Yep. So that's usually where the SBA will go if there is a collateral shortfall. Is they'll look at you on the personal side and say, okay, hey, it looks like you have your house, you owe a little bit on it. Are you okay putting a mortgage on there to get this done? And the vast majority of people, they're okay with it. They believe in their business. They know it's what needed. It's what's needed. It's not ideal. But that's what gets it done, and that's what allows them to be able to take that step forward to keep moving forward. That's the goal at the end of the day. So if that's if they have to put a few more signatures down and sign a mortgage, as long as everybody's okay with it. Like I said, a vast majority of customers have been okay with it. There have been a few that say, what, that's not what we're trying to keep business separate from personal. Totally get it, but then you're going to have to figure out that shortfall somewhere else. Are you going to pledge, an investment account, or something like that, or do we have to back down? Okay, you might want, the world. We're only allowed, we can only get you, a state, not the entire world. So, hopefully that we can come to, an agreement and get that taken care of.
Okay, and so we've heard you say loan ready before. And when you get the P&L, get the balance sheet, you're looking at assets, you're looking at history, tax information. That package, that's what really defines if someone's loan ready, is what I hear you're saying, right?
So that's on the business side. On the personal side, we'll also need some information from you. From the owners. We're looking at the same kind of thing, looking for the last 3 years of personal tax returns, full tax returns. If you have any related entities that you own, we'll ask for those as well. And then a personal financial statement, which is basically a balance sheet on the personal side. It looks to what you have for assets. It looks what you have for liabilities. So we can see pretty much everything. A vast majority, what I tell people is I don't need it to the penny. Just, do a little research and get me your best guess, your solid estimate as to what it is. Some people like to drill it down and, they'll hunt down statements and they'll get it to the penny. We don't have to have it to the penny. But, we do like to see, okay, what do you have on the personal side? Again, so if there is a collateral shortfall that, I can pretty much tell you up front, okay, we are looking at a shortfall. You have, your house is pretty well mortgaged, but you have this investment account. Don't be surprised if the SBA asks to take a hook on that. So that's it. Having that information up front, again, preps, allows me to prep the person and say, hey, yep, they might be asking for this. Just have that discussion ahead of time to make sure that, that you're okay with it, that you and your spouse are, or the kids, or whatever the tie-in is, make sure that you have that. So that's on the personal side of that. When you get all that put together, again, there's a couple other documents that they'll need, but at that point, you're pretty much file ready to go.
And the overarching concept here is if everything goes to heck, the SBA or really any lender is looking will I be able to get some of my money back that I loaned if everything falls apart? Is that I don't know. Okay.
Correct. Yep.
Well, and, Tim, let me ask you this, because you have been doing this for quite a while. It's like, I hate to ask this question, but I want, it's like, how often do you have to give bad news to somebody, or
Not very often.
not sure?
It does happen. It's not, again, it's not ideal. It does not happen very often, but every bank has, has those troubled assets. I'm not going to call them bad because, you work through them, but that's where, you have that relationship with your banker and you make the call. It's not a fun call, but you make the call, customer to banker. Hey, you know what? I'm struggling. I don't know what I'm going to do. Is there ways that you can help me out? And so, there's a couple things that we could look at to try to help you out. Maybe instead of making a principal and interest payment, we just try to go interest only. Or, do we do a deferral for a couple months and help you, basically take those payments and add them to the end, stuff like that. There are things that we could look to do to help you out. So that's where, again, having that relationship, pick up the phone, don't wait till the very end and say, hey, you know what, I gave it a whirl, but Friday's, we're going to shut it down on Friday. Because at that point, our hands are tied. There's really nothing we can do at that point.
Okay. So I'm hearing some flexibility that, if you get to you soon enough, there's options there.
Yep, there definitely could be options. So it's not guaranteed. It might be, unfortunately, there are cases where it's just too far and we don't have any strings that we can pull. But the earlier and more forthcoming that people are, the better usually.
Okay.
So I'm going to switch gears here a little bit, and can we talk about some different kinds of loans, or I know you've mentioned SBA. I don't know what options there are on SBA, and I know we're going to be talking to Carrie late in a future episode more specifically about some of the stuff with the SBA loans. But what other loans do you see, or what are some loans? Based on what I've explained, how most of our customers and most of our audience usually operates. Like, what are some options that are out there for folks?
Yeah, so with the SBA, there's three primary products that the bank will work with the SBA on to help out customers. So you've got SBA Express loans. These are usually for working capital purposes, and it's their version of a line of credit. So they help with day-to-day items, inventory purchases, things like that. So these banks will touch every year. They will be renewed every year. So that's basically an annual type of process. The SBA, the term loan product is a 7A. So this is more of their term loan product. If you're buying a practice, you're buying some equipment, you're financing some improvements to the building that you rent, things like that. So these loans usually carry maturity date, they're 5 to 10 years, depending on what the loan funds are being used for. If you're buying equipment, it's probably going to be shorter. Have a shorter lifespan, so you're probably in that 5 to 7 year range. Whereas if you're doing improvements to the building that you rent, those carry a longer lifespan, and the term could be up to 10 years. So the long term, more of the other product is the 504 product, and this is typically used for if you're financing a building purchase, refinancing or buying a building. We can also do, add funds to do improvements that you might need to that space. So, if you're buying your own space and doing some updates, that you want to get your clinic up and running, this is what you'd look for. So basically in that scenario, banks do 2 loans at closing to get the project done. Once everything is done, the SBA comes in and they actually pay off that second loan. So at the end of the day, you have 1 loan to the bank and 1 loan to the SBA. This loan usually carries longer terms, anywhere from 10 to 25 years, typically in that 20-year amortization. So it stretches that out, quite a bit longer. So as a practice owner, if you're looking to expand into a new area, renting space, seeking a 7A to get that space is probably the way to go. You can get your equipment purchased, you can get, your improvements done. You can get you some permanent working capital funds if you need to hire new staff, things like that. So if you're looking to buy a building or, build one from the ground up, that's a 504. I would, recommend a 504 is the way to go. You can purchase property, do all the improvements, purchase the equipment. Again, put some working capital funds in there for the hires of the new people. So at the end of the day, again, you have 2 loans is all. So you don't have 3 credit cards and this loan and another one and a backup with with the SBA. So you just got the couple of loans. So a major upside with the 504 is that the second loan that the SBA holds, that loan carries a fixed rate for the life of the loan.
Okay.
So if you choose to go with the SBA, you sign your docs and that loan funds and it's at 6% today. In 18 years, if you haven't done anything, your loan is still at 6%, even though the market might be at 20%. Okay. So it keeps it fixed for the life of the loan. So that's a big a big bonus that the SBA has. So it's just can't say enough about that.
Well, and you keep saying, I hear 504, I'm hearing 7A, and I'm picturing, it's kind of like the laws. So these are sections of some banking document somewhere by the federal government or something, right? Is that?
These are basically, they're just what the SBA calls these
products. So what is like the 7 and the A?
Short-term working capital.
I'm just curious. All right. Some bean counter somewhere. Okay.
I'm sure somebody came up with it and said, "Oh, that sounds good. We'll go with that."
All right. Lord knows we use a lot of acronyms and names, numbers, and things here in contracting and insurance in our world for sure. Oh shoot! I had another question for you on the lending side. And I'm trying to remember what the heck it was, but it ain't coming to me. Maybe it'll come later. Nope. Anything else on the loan side? Otherwise, we can switch into deposits a little bit and talk a little bit about that. But that's what it was. Ramp up time. So if I've got this sweet space and I want to buy it in a month. Can I do that? I just zoomed in. I don't even know how to zoom myself out here. I'm trying to figure that out quick. But can you, Tim, while I'm figuring out my Zoom situation here, can you talk a little bit about the timeline for, how long it takes to get an SBA loan or some of the other loans that you've discussed?
So SBA loans, usually you're probably looking at maybe, depending on how deep into it, how much you are, that type of thing, you're probably 60 to 90 days is my guess. If you're in the 504 world, there's an appraisal, you're buying a building, you're constructing a building, there's an appraisal. Usually those are 4 to 5 weeks. So it's not all just, the bank saying, okay, it's going to take this time. There's other things that have to go through the process. If you're just buying a practice and it's like, hey, you know what, we're going to rent this space. We're starting a new practice. I would guess you're probably in that 60-day range. So the sooner the better. If you're just thinking about, hey, you know what, we're thinking about doing this, start that conversation early. The more information you can send up front and provide, the better. That way it just kind of spreads it out a little bit and lessens the burden on you, that initial burden. So that, hey, you know what, we found a space, we need to move on this quickly. All you have to do is provide some current information and, get that request in there and away it goes. So you don't have to dig for tax returns or have your accountant send them in or anything like that. That's already in.
Okay, awesome. Thank you. So okay, let's talk about deposits. Anybody who's watching the video right now, you're going to be zoomed in on my face. I'm so sorry. I can't figure out how to unzoom this darn thing. But for everybody in podcast land, everything's fine. So let's talk about deposit accounts. Because it's nice making money. It's nice having places to put deposits. How does that fit into the long-term banking relationship?
I would say, they do deposit, the deposit accounts play a significant role for the business, once you're operational. So we've got bankers at every branch that we work with that deal specifically with deposit accounts. They know a heck of a lot more, the ins and outs than I do. I work typically on the loan side. So, if we get to that point, I'll bring in our deposit experts and let them, show their expertise, when it comes to talking about deposit accounts. So typically we ask customers, if you're operational, if you're brand new, it's just, okay, what do you think you're going to, do and kind of work at it that way. If you're already existing, and you're looking to make a change or expand or whatever, we'll typically ask customers to bring in their last couple statements, from their existing account if they're at another bank. so that we know what kind of account that they have to ensure that you're going to the same account, that it is the right account. So as long as you're okay, with that type of account that you have now. If you want to change, we can do that at that time, but we just want to make sure that you're in the right account. So for accounts that have significant balances, we can go look at analyzed accounts. Usually those are better, as any fees that you might be charged could be offset by earnings that are, that your account generates. But I would say, a vast majority of the accounts that we work with, they're just regular business accounts. No, frills, they're very minimal on the fees. It offers the things that most companies need. So, a newer item that's come out over the last, probably, last handful of years, it's called Positive Pay. So whoever handles the books for the company, they put in, again, it's one of those where it takes a little time, but once they're used to it, it gets easier. But they, whatever the checks they cut that day, ACH items, whatever sort of payments that they had that day, they put into the Positive Pay. So that when those items come through, if they don't match, to the penny, they automatically get flagged by the system, and that person has to approve it, or that payment will automatically get returned. So this has stopped quite a bit of fraudulent items from hitting customers' accounts. So it's been a really good, product for customers. You do have it. There is a charge to it. It's minimal, but it definitely is reduced the fraud that we've seen and caused fewer headaches for customers. So like I said, it's to the penny. They're very exact. If somebody cut a check for $1,000 and 5 cents, but they forgot the 5 cents, it'll flag it, and they're like, oh, yep, okay, that one should be, that's my mistake, and they can push it through. It's not like it has to get returned, but where we've seen it is, somebody sent a check for $500 to a vendor, somebody gets it, they wash it, and all of a sudden they're trying to push through a $5,000 check. Well, that gets flagged, and they can return it right there.
Any other tools or any other interesting accounts or what are some? I'm usually just thinking, there's the account where the money goes in and out of, and then there's the savings account where you're just going to throw the money in there and hope it makes some interest. What else you got? What are some other types of accounts or tools that people can use?
So those are the big ones. Like I said, generic. You put the money in the checking account. You got a savings account, get a little interest income, things like that. We can set up sweeps. So basically, that is an automatic. You can peg a balance that you want to keep in your checking account. So if you want to say, I want to have $10,000 at all times, at the end of the day in my checking account, everything else will go to the savings account. So you peg a balance, and the system will automatically sweep it at the end of the day. Either pull it from the savings account to get your checking account balance to $10,000, or if you deposit $100,000 that day and you have $10,000 worth of items that come through, the system will automatically move $90,000 to your savings account. So it takes a little bit of the kind of the pressure of customers, of having to, where are we at in the account, that type of thing. They just know at the end of the day, it's, they should have 10,000 and the rest will be in their savings account. They just don't have to worry about, I got to get to the bank, I got to make a transfer. It's already done for you.
Interesting. Okay. That's pretty cool. I wasn't aware of that.
Well, and we've used our line of credit with you guys quite a bit too, which has been convenient, very convenient. That's for sure.
Yeah, I love those lines of credit. What about, definitely in the hard times, and our business is very cyclical. So the beginning of the year, our revenue is down 20%. The first 2 months doesn't matter what, and that's just because everyone's insurance policy resets. So we use it then, and then we make it back up later once those payments start coming through. So, and I know because that happens, and really it's month 2 and month 3 for us, because it's month 1 and month 2 for our customers or providers. There's just that downturn, and then it pops right back up and averages out again. So I know lines of credit or these sweeps actually sounds really good too, as a way of managing the just some of those lower parts of the cycle. So we've talked about a few things like what are some mistakes or misconceptions that business owners make when it comes to working with their bank? And I know we talked about, not talking to your banker soon enough or not establishing that relationship, but what are some other things you see out there where you're like, oh man, I wish you would have thought to call me, or or what?
So I think one of the biggest mistakes that I've seen business owners do is try to reduce their taxes by writing off as much as possible. Obviously, nobody really enjoys
Tim,
paying taxes.
the accountant was on last week, and he said the exact same darn thing. So I'm sensing a theme here, or we must just know good people who who know how to do it right.
Right.
Yep. So yeah, I mean, like I said, nobody enjoys paying it. You want to pay the minimum amount of taxes. But those are the documents that we rely on to make our decisions. You can tell us, yep, we, made all this and it, it's better than it is. But at the end of the day, we have to rely on the paper, on those tax returns, financial statements to make the decisions. So, if you're showing, a loss or minimal profit every year, when it comes down to it is when you need something, it makes it tougher to get those things pushed through because on paper, it shows that you haven't been able to make it work. Obviously, if everything is current and your credit score is fine, it's worked, but it makes it tougher. It makes it harder for us to get through. So like I said, we understand businesses, probably do better but we just can't use that verbal information. So, when examiners, are in here and looking at files, it's very black and white at what is looked at. So again, at the end of the day, showing a profit, paying some taxes or paying a little more in taxes, it might not be desired, but it helps in the long run, for a loan or if anything is needed down the road. Again, it costs a little bit more. You got to pay a little bit more in taxes, but when we're looking at the bottom line and kind of running our reports and things like that, especially to show examiners, that's where it definitely helps out, makes things easier.
Okay, I think we learned from our accountant, and then from you here now is like what's on the advice. The general advice seems to be what's on paper should really match what's in reality as much as possible, and that'll grease the skids for the business to grow. Okay.
Correct.
All right. Well, do you have any examples? Have you worked with any behavioral health? And I know you mentioned you work with some medical clinics. So whether behavioral health or not, but of where a strong banking relationship between the banker and the owner has helped solve a problem or helped them grow or anything.
Actually, I just within the last I'm going to say 60 days or so, I was referred to business. Referred an owner from a current customer. They were selling a piece of equipment. They had their accounts at a national bank, but they didn't have a banker there. Nobody that they could work with. So he'd been a customer there on the business side for I think maybe 10 years or so. But he'd had his personal accounts there for at least 20 years. But he'd been using his personal cash to cover items for the business to help it grow. So, he's, like I said, he's used his cash to help it grow. And at this point, he'd used a majority of his cash to grow the business, to where it was, but he was capping out to where they weren't able to pick up some of these bigger jobs, things like that, because he didn't have the cash to do that. So, like I said, I worked with him on buying a piece of equipment, and, we're sitting there chatting, and I just asked, is there anything else I can, help you with? That or something that you want to talk about today. And so he talked about this using his personal cash to get the business, to where it was, that he was tapped out. He couldn't really grow much more than where he was. So, we talked about a line of credit, kind of how that works, that type of thing. We ran through all the numbers worked. So we put it into place. He's just been, super appreciative, for it. He said that he's just been sleeping better knowing that he's got that backfall if needed. That if a bigger job pops up, he can go after it instead of passing on it. So he just said there's nobody there at the bank that he was at that reached out to him or that he could reach out to. Nobody that he could ever really talk to about this to help the business grow. So he wasn't sure, was he too small for him? He didn't have the kind of the why. But in my mind, I mean, that's a big miss on bankers there on their part. So, here, at BankVista, we don't talk to somebody, about being too small, that we don't want to help them. Everybody deserves the same, amount of time and consideration. No matter how small you are, or, obviously, bigger is, there are some customers that are just too big for us. But a vast majority of customers, especially those small businesses, everybody deserves the same amount of time and consideration. So try to have those conversations with everybody.
Okay. Well, and if to find that banker for them to talk to, what how should a practice owner evaluate different banks or bankers? Or I mean, so speaking from experience working with you, Tim, it's just been good having this relationship that we've been able to. We have no hesitation to call you about anything or email you about anything. But what would you advise for someone who's going off and who's my banker going to be? How do you help them evaluate that?
I think what I've noticed a lot of people have done is they'll talk to, I don't want to say competitors, but, friends in the industry, that type of thing. Hey, you know what? I'm at this bank. It's just not working. I'm not getting anything. Can you refer me to somebody? That type of thing. If they don't have anything like that, I think just being able to ask, questions in general and receive immediate answers, or answers in a reasonable amount of time, from somebody that you're trying to vet, that'll tell you if they're a good banker or not. So, if you're reaching out multiple times, to get the same questions answered, hey, I asked you on Monday, and Friday, trying to get these same answers, you're probably just being put in line, and they'll get to it when they can. So, bankers, in my personal opinion, we should respond, within a half a business day, as long as we're in the office, not on vacation. Yeah. So if you reach out to us in the morning, there's really no reason that you shouldn't hear something by the end of the day. Or if you reach out in the afternoon, you should hear something either that afternoon or, the next morning. So a vast majority of bankers, should have email access on their phone. So that, if you send them an email, if it's, hey, can you call me right now? Or tonight, I need to talk to you about this. We should be able to, respond right away. So, like I said, that's why I make sure I always put my cell phone on my card. I just ask people, if you've got an immediate issue or question, you reach out to me. Let me deal with it. Let you keep worrying about, you do you. I'll take care of this question and try to get it answered. So. Okay. That's one of the bigger things. Some other kind of generic questions. Have you worked with somebody that's in the field before? If you're interviewing bankers, ask them if they worked with anybody that's in that industry. Do you have any suggestions or options? To help me with this situation. Can we get a few options? To give me a choice so that if we get to that point, I can pick where I want it to go. So. A few kind of options like that, but the biggest thing is again just having that relationship. If you don't have a relationship with somebody, talk to other people, talk to friends, talk to colleagues, that type of thing, and just ask, hey, is there somebody that would you recommend your banker? Hopefully at the end of the day they say, yeah, definitely talk to Tim. He's he'll get back to you right away. He'll answer questions. He'll get you going. So hopefully they whoever you're talking to has that relationship with their banker. If they don't, it's the same thing. They might need to have a conversation and look at possibly moving somewhere else as well.
So Tim, I'm hearing a theme here, which is definitely relationship. And I'm going to use the term customer service too, but it's relationship. And I'm going, okay, so are there? How do I want to put this? What if? Does a community bank charge more for those relationships, or is there? If I go to a national bank and I can get 0.25% less or whatever. I value relationship, and what we have with you guys. But some people might value that 0.5% or whatever. I don't know.
Yep. Yeah. There's definitely. I would say, the bigger banks, they might be able to be a little more cost efficient. They're so big. They're so, they have access and they can, basically say, okay, we're not paying more than, this on, deposits and that type of thing. Community banks, we might be, a little more expensive. Again, we don't have those efficiencies that some of those bigger banks have. But usually I would say, our deposit rates are probably a little better. We're going to be close on the loan side. Maybe if it's a 1/4 point, something like that, maybe even less. So at the end of the day, yes, you might be paying for a little more, but is is knowing that your banker, has your back and that you can reach out to him, him or her anytime, throughout the day, weekends, whatever the case. Is that worth the extra $57 a month that that you could pay, in your for your loan for interest? So, for the most part, banks are they should be roughly in about the same, come in at the same, loan rate wise, deposit rate wise, things like that. Not everybody's going to be the exact same. Everybody calculates theirs differently, but everybody should be in the same ballpark. So it really comes down to, if you're you pitting a national bank against a community bank, and the community bank is 10 basis points more, again, is it worth if you're really looking at the bottom line, and you don't really need, a banker to do things. It's just a transaction. By all means, go to, follow that bottom line, go to the whichever's cheaper. But if you are looking for that relationship, that type of thing, you're probably better off. It might cost you a little bit more. Again, if there's multiple, somebody comes in at 4% and somebody else is at 8%, yeah, it probably makes sense to, chase that, but still have that relationship with the banker just in case down the road, and be honest with them and say, hey, I went with this big bank because they offered me 4%. And you weren't even close. So again, have that conversation with them, be upfront with them. But again, even though you're not, somebody else does a loan, keep that relationship with them so that if down the road something does come up, they're there they know what went on last time. They're familiar with you, and you can, hopefully work with them again somewhere down the road.
Yeah. Well, and if I can call the VP here, I'm really happy about that. Get his direct line.
Yep.
So.
Yep. And that's our customers at Breezy. Like I said, Phoenix too. Like there's a lot of people who value relationships, and we charge. We are not the cheapest biller that's out there by any means, but people will go with us because we offer a higher level of service. We also give away cell phone, give cell phone numbers to our customers so they can reach out to somebody. And I always tell people if they ever need anything from me specifically, call me twice and I'll get back to you as quick as possible. So we kind of hit at that level too. So speaking of get in touch with people, how do people get in touch with you, or if they want to learn more about BankVista or other offers, or if they're just looking for a more responsive banking partner? Let's tell folks how to get a hold of you.
So by all means, our website's out there, www.bankvista.com. Go out there, play around with the website. We have a bunch of tutorials out there. So if you're interested in, positive pay or this type of account, whatever the case is, remote deposit, whatever the case is, we've got tutorials out there. Hopefully that check the box and that will show you this is how you do it. This is how, simple it can be. So personally, you can reach out to me. My cell phone number is 952-465-9839. You can email me, tim.sery@bankvista.com. I'm out on LinkedIn. You can, connect with me that way. So, multiple ways that you can, like I said, reach out to me, play around on the website. If you want to keep it kind of generic, you can, send a reach out contact through the email through the website and just say, hey, I've got some questions. Can somebody give me a call? So multiple ways that you can touch base with us for sure. To keep it easy as
awesome,
as possible.
Thanks. And then you mentioned a current CD, or you got a CD special or something going on. So please, share with the people what you got, what that's about.
For sure. We've got a couple CD specials right now. And with that, I do have a disclaimer that I have to put out there, but, 2 CD specials that we got right now. One is a 9-month CD. It's at 4% with an APY of 4.02%. And then if you want a little longer term, we've got a 19-month CD. That's at a little higher rate. That's at 4.05% with an APY of 4.07%. So 2 solid little products there that we've had some success with. So, but with that, I must say that the information shared in this podcast reflects the views of myself as a guest and is intended for general information purposes only. It should not be construed as legal, financial, or business advice, nor does it constitute an offer to lend. Listeners should consult with their own advisors before making any financial decisions. Any discussion of SBA programs is based on current understanding and may not reflect the most recent guidance or eligible criteria. Vista is member FDIC and equal housing.
Tim, did you come up with all of that?
I sure did. Right off
Perfect.
the top.
Wow, right off the top. Well, and we've got another episode that we have planned too, right? And we're gonna can you tell a little bit about what the plan is for the next one? We're gonna dig into SBA loans a little bit more specifically, right? With Carrie.
So we've got my coworker Carrie Sherman. She's been doing SBA loans for I'm going to say 30 years. It's been quite a while. So she has that specific SBA knowledge of all the little intricacies and things like that. I'm more general, where we'll do SBA loans, but we'll also do regular lines of credit or whatever the regular term loans, things like that. She works on our SBA loans, so she will kind of really drill down to the nitty gritty on
Awesome.
on those
So
products.
listeners, if you want to get a little bit more of that depth of information, we'll definitely be doing a follow-up a little bit later. I think that's slated for September or October. And so we'll cover that in depth then. So that's it. Tim, thanks for joining us. Before we rolled out, we do a little, what we call the reflection round. You wouldn't be in the mental health practice if you didn't have a little bit of reflection here. So we just like to ask our guests, what you've been thinking about lately, personal, professional, anything at all.
So I guess a little bit of both, on the professional side with, going to Madison, that 2 weeks, it's halfway through, almost there. So kind of just keep, like Dory said, just keep swimming, got to keep moving forward. So on the personal side, this time of year has been very new to us. So this past Sunday marks my 2-year anniversary from being diagnosed with leukemia. So it was a very trying time to get through, basically 2023, the second half of 2023. So it was, we got through it. Everybody kind of, helped out and got through it. So that was 2 years ago. Last year, this time, I made sure to do a little thank you to my wife and kids and took them. We did a 2-week vacation. So we just kind of every night just been, remember we did this, last year we were doing this, the next day, a year ago tomorrow we were doing this. So we've been talking about that.
What a great way to juxtapose.
So you come out of the low to a nice high.
Well, and I was thinking about gratefulness and actually, we knew of what you were going through. And I'm sitting here going, here we are talking banking and stuff like that today, and grateful to have you where you are today. And my thing, my 15-year-old grandson did the Bears song at our family reunion. All but he led the Bears song.
Oh my gosh.
and who taught him that how many years ago over and over again. So just grateful for family,
We'll have to get into the context of the Bears song, just how deep those roots are on that thing. Goes back decades. That's interesting too. So you're talking about, I was thinking about journeys. That was the thing that I was thinking about recently. In 3 different ways. One is I now have 2 teenagers at home. So all my kids are in the teen years, my 2 boys. Another is this journey my eldest and I are embarking on, this 42-mile hike. And then the third one in the business world is I'm going to be completely out for 9 days from Breezy and Phoenix, from these companies. It's by far the longest I've been completely out of touch. Like we don't have cell signal. We got nothing where we're going hiking. And to have a team in place that I trust, or that really can just shove me to the side and have the business run without me is a really cool milestone to be at, and it's been one hell of a journey to get to. So just it's a lot of journeys here on the podcast. This episode, I'll say, which is really cool. All right. Well, big thanks to Tim Sery from BankVista for joining us today. If you are running your own practice or thinking about it, don't underestimate how important your banking relationship really is. Find someone who answers your call and knows your name. So until next time, keep your eyes on the horizon.